Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so let's hop into the news real quick and then we'll look at the charts. So, what's coming tomorrow and the 19th? We have some big news. For tomorrow, we have the US retail sales month over month, and then we also have the US PPI year over year data coming out. That's gonna be pretty important. So, the retail sales are gonna be good to see how how we performed in December into this month, and then obviously the PPI data is going to be great. It's forward-looking data, so it can give us an idea of what we should expect to see in regards to inflation with industry. So we'll get a good idea of where inflation's going. Is it slowing down? Is it increasing? Is it stabilizing? Well, we're going to get an idea of what we can look forward to next month. And then we also have the industrial production month over month. It's important news. It may not hit the markets specifically unless it's a very, very jarring number, but it's most likely just going to be very informative data, but probably not really affect the markets too heavily. But we'll see. It depends what actually gets reported here. And then on the 19th, we have the initial jobless claims. This is actually going to be a big number here. I do expect this to actually increase in jobless claims because seasonal jobs are done. They're over, and it's very likely that we have more people now jobless because of that. So I would expect that to rise. And then we have the U.S. housing starts number, which is actually pretty important because we're going to get an idea of, is the housing market finally slowing down? Is it no longer a seller's market? Is it going into a buyer's market? In my opinion, we're probably going into a buyer's market. In some places we already are. So watch for this data to come out. It's gonna be pretty important. It's slow moving data, right? So it's very important, but it may not affect the economy or the markets immediately, but it's good to keep your eye on. And then we have the crude oil inventories. This is going to be important as well. Again, may not affect the stock market directly, but this is going to give us an idea of how energy is doing inflation wise, and honestly give us an idea, is demand starting to spike in oil, and what we can expect going forward. So I'm looking very forward to this number here, and that's about it for this week. That's the major news this week. Now let's hop into the charts. We'll go into dollar first, so let's get off this chart. So the dollar is the first chart we're going to be looking at, and as you can see, had a nice drop, and finally we've come into the ascending trend line. So this ascending trend line, I've been saying this is going to be the level that eventually price will get to, and it's very unlikely to break it on its first test. We should see a pop coming from here. And that's what we're getting. We're potentially getting here, right? So we're getting some signals that we're going to have continuation up. Had a nice doji candle here. Had a nice bullish candle here. There's like a little bottoming tail candle. And we got another doji candle today so far. So not too bad. I think we're going to start consolidation here and probably grind our way up. But depending on the price action, it could be fairly bearish, right? So if we have price action that's kind of grinding like this, all right, so that would tell me is you're probably looking at a rising wedge structure, which will then most likely lead to a breakdown from this ascending trend line, coming into this lower blue zone back towards like 100.39 to 97.32, and that's actually that's far more likely to happen eventually. I actually don't see that happening right now. So what I'm actually looking for is a pullback up towards 104.88 and potentially even higher, back towards these fair value gaps to get filled and tapping into the low 106, and then a failure down and then breaking the structure. Okay, I do think we're going to have a short-term rise in the dollar. Okay, a short-term rise, but in the end it's going to lead down towards lower levels in my opinion. But we'll just have to wait and see. I'm seeing short-term strength, but mid to long-term weakness right now. Okay, so now let's get into the Dow. So the Dow is having a pullback, so came back into this bearish fair value gap, sold off so far, coming back under this wick here. So we can actually take off this level here. We'll take this off right here. And now it's most likely going to come all the way back down towards this descending trend line and maybe even these lower fair value gaps. So I was seeing this potential move happening here, right? So I saw us break down, then we had a nice wick up here to fill out this fair value gap to start tapping into this liquidity, and then we had a failure back down. I was seeing the retracement coming much lower towards these levels down here, but we had a nice spike, and it looked like we had to grab a little bit more liquidity, and now we have a nice topping pattern here, right? A nice 3-candle topping pattern. When you have a nice rise up, then you have a doji, okay, and then you have a bearish engulfing. That's I love seeing that pattern. So this pattern is definitely insinuating more continuation to the downside, and we're probably going to take out the liquidity under this low wick down here, this pivot, and then coming into these bullish fair value gaps down here, and then we'll see, will the Dow be able to make a higher low from this level here? And if it can, then I would look for continuation even higher. But I am looking for a pullback that will exceed at least 32,440. So that makes sense if I do see strength of the dollar as well. So things are starting to line up a bit here. So watch for the continuation for the Dow to come lower, and we'll see how deep that retracement is, or if it's just going to be continuation of the bear market trend, of the bear trend, which is definitely a possibility as well. So we have to watch closely. But overall, it's played out pretty well. Overall, followed the path that we've had. Next is S&P. S&P fighting at the descending trend line right here. So fighting at this level. We'll see if it has that continuation. Again, it's going to be very dependent on the Dow. There's a lot of fight here. If we do pull back, we'll at least pull back to 39.20 to this fair value gap, but most likely we'll have a deeper fall. So we'll fall back under this low here, or even attacking this low down here, right? And then we'll be looking for a higher low structure from this low if we're going to have that continuation to the upside in the markets. All right, and I'm actually leaning towards this potentially happening. We just need to wait and see what the Fed's going to do. But Bitcoin's giving me some answers that I'm curious to see how it will play out with the equity markets, because I actually think Bitcoin's about to be quite bullish for some time. We'll get to that in the end. But next is the NASDAQ. Let's take a look at the NASDAQ. So NASDAQ trading within this bearish fair value gap, actually wicking towards the top of it and failing off. So right now it's just sitting here. But if the Dow and S&P have continuation to the downside, watch for the NASDAQ to follow suit. I'd actually watch for NASDAQ to get to at least 11,000. I think they go even lower, back down towards 10.9, 10.8, and pretty much coming back towards these lows again, okay, and probably taking out as well. So if the NASDAQ starts to trade up from here, it's just showing some relative strength, but eventually it will follow the Dow and S&P if they are selling, if they are being sold off, rather than the NASDAQ pulling them. It's very unlikely for the NASDAQ to pull them anywhere. It's mostly the Dow leading the show, and then the S&P, and then the NASDAQ. All right. So next is oil. Oil, oh boy. So oil, like I've been screaming, is bullish as hell. Watch out for oil. This chart is definitely ringing the alarm bells that inflation's nowhere near done rising. It's not stabilizing. It's probably going to increase, and we're probably going to see increasing in prices for perishables, like for food, and it's unfortunate, and obviously for energy. So watch for this to continue higher. This structure is very bullish. Came back down, tapped this fair value gap, found the liquidity to continue higher, and now it's attacking these highs, and in my opinion it's very likely to continue higher, taking out this fair value gap and at least tapping into this fair value gap. But I actually think you're probably going to actually see moves back towards 90 plus and potentially even the low hundreds, back towards the top side of this monthly descending bullish structure. So watch out, guys. This is a very concerning chart, just for the cost of living. So be very, very careful. But this is looking very strong for oil. Next is gold and silver. So gold, just like the Dow, showing a topping structure here, strong bullish rise, doji candle, and then bearish engulfing, and now we're likely gonna have continuation, and we have these fair value gaps for it to come back down towards. So this is a bullish retracement down. Now it can be fairly deep. It's risen so much that it can be a fairly deep drop. What would be most bullish if it holds 1800, so holds this general trend line zone, holding the lows of this consolidation and the high of this pivot. That would be quite bullish to see, and then it would probably lead to major continuation challenging 2000. But we have to wait and see how deep this retracement will be. But in the end, this is extremely bullish. But look for a major pullback towards these levels. And if we do lose 1800, look for a pullback back down towards this fair value gap down here. Okay, so now let's take a look at silver. Let's go to silver real quick. So silver, like gold, is also showing a topping structure potential here. We have like a rising triangle here, something like this. I know it's not completely clean how I'm drawing this, but you get the gist of it. Again, topping structure, trading within these bearish fair value gaps, filling out the liquidity, and it's showing all the signs that it's likely to break down, and it's going to break down probably past this fair value gap pretty easily, and I would say at the very least back down towards 22 to 21.50 and potentially even lower, looking to take out this low wick here, grab the liquidity there, and then trying to hold this ascending trend line here. But it depends on how deep the retracement for gold will be. Silver will ultimately follow that structure, but I do see at least 22.5 being the most liberal target, but the more conservative, deeper pullback target, I would look for 22 to 21.5, potentially even lower back down towards 21. All right, now let's take a quick look at Bitcoin, because I do want to talk about Bitcoin real quick. As you know, crypto has been exploding, Bitcoin as well, and Bitcoin broke this structure. Now, what I'm seeing is a lot of people are trying to go short here, and now it's not incorrect, of course. You definitely could have a pullback here. After such a rise, you would expect that. But I will say this, the probabilities aren't as high as one may think. Now, again, it's all probabilities, no guarantees. I do think many shorters here are going to, unfortunately, be punished. The reason why is because they're not paying attention that this is not a daily breakout, okay? This is not a daily breakout. This is a weekly and monthly breakout. So the weekly breakout is clear. All right, the weekly breakout is clear. We've closed the candle here, and now if we can get this weekly candle close above this high, which it's actually very likely to do, you'll have a confirmation in my book. But this is a clear breakout structure that's going to most likely lead to a macro lower high. So we had the all-time high here, okay, and then we had this high here. All right, so you're likely going to see a significant move up, guys, going towards 30,000 plus and making a lower high again, and then having continuation going towards sub 15,000 and potentially all the way back down to 10 to 8,000. Okay, that's what I'm seeing. So over the next 1 to 6 months, so the next 1 to 2 quarters here, you're probably going to see a bullish Bitcoin. Now, the reason why I'm saying this is because, again, this is not a weekly breakout either. It's a monthly potential breakout. All right, and the way this gets invalidated is Bitcoin gets sold back down under the high of this last month's wick. So the high of this month was 18,000. So the high of December, 18,376.59. That is what needs to happen for this to get invalidated. So Bitcoin needs to get sold down, okay, under that level for this potential bottoming, a short-term bottoming structure to get invalidated right now. And that's extremely unlikely, by the way. All right, we do have 14 days, but that would be a very, very bearish 2 weeks. And I don't see that happening right now. All right, so many people who are short here are most likely going to get punished, in my opinion. Now, they may not, and I don't want anyone losing money, so I hope they aren't. If we do get a pullback, we could see it get back under that 18,600 pretty easily. I mean, we have fair value gaps all the way down through here. However, the weekly is not really indicating that right now. It is quite early, but this is not how this normally looks when you're looking for a pullback of any significance. All right. So for the daily to pull back to 18,600, that would be a major retracement off of this weekly candle. And this being the beginning of a surge is extremely unlikely. Okay, it's just extremely unlikely. I don't know how else to say it. It's very, very unlikely. It's literally this. It's this in the beginning right here. This is what you're looking at. All right, guys. And you may get this, which is nothing, and then you're gonna get this. So it's not rocket science. All right, this is the weekly time frame is going to overrule any time frame you're using, especially if you're trying to see a retracement that's going to retrace more than 50% of a breakout candle on the weekly time frame. It's very unlikely. Now, it may happen. You may get a false breakout. If you catch a false weekly breakout, definitely could happen. It just doesn't happen often. So I'm just warning you, if you're going heavily short here, be very, very careful. All right, be very, very careful. You're playing with fire, but definitely keep your eye on the weekly. And then as we come into the end of this month, watch for this candle, because this is also going to insinuate continuation to the upside and probably come into this monthly fair value gap here. The low being about 31.5. Right, so let's actually mark it real quick. So these would be the levels I'd be looking out for, about almost 32,000 to the high of about 37.5. Now these might seem like crazy numbers, they're really not that crazy. So if you're looking at the weekly time, it's not that crazy. Okay, this is just another lower high off of a bear trend, and that's how this goes. This is not, bear trends don't just go straight down. I don't know why people keep doing this. Like, this is not how this happens. This was a major move up right here, by the way. This was a pretty major move up. Now, lackluster, but it was a pretty major move up from here, here, and then here. And now you had what looks like a bullish structure on the monthly breaking bullish. All right, so watch for this to move up at least to 30,000 or 29,000, I should say. Okay, I think short term you're going to hit the 24, 25, but if we're looking at the monthly time frame, you know, this level here is where I would target, you know, minimum right now. Seriously, the lows of this level is about 26.8, and the high of it's 29.2. And if we do the measured move of this monthly structure, you're going to see that it's probably going to match pretty close to that level, and it does. It literally it is into that level. So that's what I'm saying. Be very, very careful if you're looking at this weekly structure. I called it a monthly structure. I'm sorry. This weekly structure where the monthly is breaking out of it. So just be very careful. That's all I'm saying. If you're long, I would say just sit tight. I mean, if you're in the lemon garden, you know we're long. We're just chilling. We're deep in the money now on everything, so we'll just slowly close out our longs, and then, like I've mentioned in the premium chat room, that, you know, our plan, what we'll do as we get closer towards these levels. So just keep everything chill, and don't overexpose yourself. Again, we may have that pullback. I mean, I will say on the daily it's overextended. We should have a pullback, but when you're dealing with a weekly and potentially a monthly breakout, you may not get as deep. It may seem crazy. Let's just put it that way. On the daily time frame, it may seem absolutely like ridiculous. So something similar to what you're seeing here, where you just don't get any major pullback until much later. So just keep that stuff you know, in your head, essentially. All right. This could be the beginning of a major move up, like a bear market rally, and then a massive continuation lower. So short term I'm very bullish, but I would say short term, mid-term I'm bullish, but long term I'm actually fairly bearish on Bitcoin and most crypto. All right, everyone, that is it. I hope you enjoyed the video. If you have any questions for me, make sure to leave a comment on the video or ask me in the Discord. And if you're interested in any of those services I provide, you know, whether it's the day trading room, the swing trading service, or the tutoring service, check out the Patreon link in the description below. You can get all the details there. And I do want to mention one more thing. I'm actually in the process of creating an indicator. It's just a basic breakout indicator. Now I may just give this out to the members on the Discord. I haven't really decided. I am kind of testing it out. I have given it to some people just to, you know, I want to get their feedback and such on it. But overall, it's been going pretty well. And soon I'm gonna kind of introduce it and maybe do like a video on it. But I am looking to potentially just give it to people who are part of the premium services and get their thoughts on it as well. So if you are interested in that, you know, make sure to leave a comment. Let me know what you're thinking about that as well. Again, it's just a basic indicator. It's not anything super crazy. It's not proprietary stuff. It's just a breakout strategy, but it is very, very effective, and I've done a lot of back testing on it so far. All right, that's it. That's all I got. Let me stop rambling. Everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.